Listen up, crypto warriors, because what I'm about to show you about Cardano will blow your mind. ADA just exploded 60% in 4 weeks, open interest hit an all-time high of $1.66 billion, and the technicals are screaming one thing: we might be headed straight for that psychological $1 level. But here's the catch. The RSI is showing extreme overbought conditions, and smart money is starting to position themselves. So is this the beginning of ADA's next major leg up? Or are we walking into a trap? Stick around, because by the end of this video, you'll know exactly where Cardano is headed next, and how to position yourself accordingly. Alright guys, let's break down what's happening with Cardano right now, because this move is absolutely insane. ADA is trading above 88 cents. That's a massive 60% surge over the past 4 weeks alone. For context, we're talking about one of the top cryptocurrencies by market cap making moves that would make even Bitcoin maximalists take notice. Now, before we dive into the technicals and what this means for your portfolio, let's talk about why this is happening. Because when you see a move like this in crypto, especially in today's market conditions, there's always more than meets the eye. First off, we need to understand the derivatives market. And this is where things get spicy. Cardano's open interest, which for those new to crypto is essentially the total value of outstanding derivative contracts, has absolutely exploded. We're talking about a jump from $1.18 billion on June 14th to a record-breaking $1.66 billion. That's not just growth, that's institutional-level money flooding into ADA positions. But here's what most YouTubers won't tell you. Rising open interest doesn't automatically mean bullish. It means there's serious conviction on both sides of the trade. However, when you combine rising OI with a 60% price increase, that's when you know the bulls are in complete control. And it's not just the derivatives market. On-chain data is backing up this narrative in a big way. Cardano's weekly token trading volume surged from $8.12 billion in the second week of July to $10.30 billion last week. That's the highest level we've seen since mid-March, and it tells us that real money, not just speculation, is flowing into the Cardano ecosystem. Now here's where things get really interesting, and this is the part that could make or break your next trade. The technicals on Cardano are painting a picture that's both incredibly bullish and potentially dangerous at the same time. Let me walk you through the weekly chart first, because this is where the big picture becomes crystal clear. ADA has been rallying for 4 straight weeks. That's consistency you rarely see in crypto. More importantly, it closed above that crucial weekly resistance at 80 cents last week. In technical analysis, when you break and hold above a key level like that, it's typically a signal that the next leg up is coming. The weekly relative strength index is sitting at 58, which is above the neutral 50 level but still has room to run before hitting overbought territory. The MACD, that's the moving average convergence divergence for the newcomers, showed a bullish crossover last week. This is your classic momentum confirmation signal that smart money pays attention to. But here's where it gets crazy. If ADA continues this upward trajectory, the next major target sits at $1.01. That's the 61.8% Fibonacci retracement level calculated from December's high of $1.32 down to February's low of 50 cents. For those who don't know, the 61.8% Fibonacci level is like kryptonite. Prices either respect it completely or blow right through it with massive momentum. Now, let's zoom into the daily chart, because this is where the action is really happening. On June 9th, ADA broke above the upper resistance line of a falling wedge pattern. For those keeping score at home, falling wedges are typically bullish reversal patterns, and when they break to the upside, the measured move often equals the height of the wedge. That target, it was 84 cents, and guess what, we hit it last week. But Sunday's action was the real game changer. ADA closed above that daily resistance level at 84 cents, and as I'm recording this, it's continuing to trade higher above 88 cents. This is textbook breakout and retest behavior. Here's where the risk-reward gets interesting. If that 84-cent level now acts as support, which is what we want to see, ADA could extend this rally all the way to $1.02. That level coincides almost perfectly with our weekly Fibonacci target I mentioned earlier. Break above that, and we're looking at the next daily resistance at $1.13. But, and this is a big but, the daily RSI is reading 82. That's extreme overbought territory, the kind of level that makes experienced traders nervous. When RSI gets above 80, it usually means one of two things. Either we're in a parabolic move that still has legs, or we're setting up for a significant pullback. Now here's what has me on the edge of my seat, and it should have you paying close attention too. We're at one of those critical moments in crypto where everything could change in a matter of hours or days. The MACD on the daily chart showed a bullish crossover at the end of June, and those rising green histogram bars above the zero line are telling us that bullish momentum is still gaining strength. This is the kind of momentum that can carry prices much higher than anyone expects. But here's the million-dollar question that's keeping me up at night. With ADA already up 60% in 4 weeks, and the RSI screaming overbought, are we looking at the final blow-off top before a correction, or is this just the beginning of something much bigger? Think about it this way. We've seen this movie before in crypto. Remember Bitcoin's run to 69K? Remember Ethereum's push to 4.8K? The pattern is always the same. Strong fundamentals, increasing institutional interest, technical breakouts, and then that moment where everyone asks, is this time different? The derivatives data suggests that big players are positioning for even higher prices. That $1.66 billion in open interest didn't just appear overnight. It represents serious capital allocation decisions by institutions and whale traders who have access to information and analysis that most retail traders can only dream of. But here's what's really fascinating. The on-chain metrics are supporting this price action. That surge in trading volume to $10.30 billion isn't just speculation. It's real economic activity happening on the Cardano blockchain. When you see price appreciation backed by genuine network usage, that's when you know you might be looking at something sustainable rather than just another pump and dump. The key level everyone should be watching right now is that 84-cent support. If it holds, and I mean really holds with conviction, then this rally has serious legs. But if we see a breakdown below 84 cents, then we're looking at a potential retest of the 73-cent support level. Alright, let's cut through the noise and get to what really matters. Where is Cardano headed, and how should you position yourself? Based on everything we've analyzed today, here's my take. Cardano is in the early stages of what could be a major bull run, but we're approaching a critical decision point that will determine whether this momentum continues or we see a healthy pullback first. Here's how I'm playing this. If you're already holding ADA, congratulations, you're sitting pretty. I'd be looking to take some profits if we hit that $1.01 Fibonacci level, but keep a core position for the potential run to $1.13. If you're looking to enter, wait for a pullback to the 84-cent support level. If it holds with strong volume, that's your entry signal. Stop loss below 73 cents. Target the $1.01 to $1.13 range. For the swing traders out there, this setup has all the ingredients for a momentum play. Just remember, in crypto, what goes up fast can come down even faster. Position sizing and risk management are everything. The institutional interest we're seeing in the derivatives market tells me that this isn't just retail FOMO. When open interest hits all-time highs while price is rallying, it usually means the big money believes there's more upside to come. Looking at the broader market context, if Bitcoin continues to hold above its key support levels and we don't see any major macro headwinds, Cardano could easily break that psychological $1 level and make a run toward its previous highs. So there you have it. Cardano's explosive 60% rally backed by record open interest and strong technicals pointing toward that crucial $1 level. Whether you're bullish or bearish on ADA right now, you can't ignore the data we've covered today. What do you think? Are we headed for $1 or is this rally running out of steam? Drop your predictions in the comments below. I read every single one and love hearing your perspectives. If this analysis helped you understand what's happening with Cardano, smash that like button and subscribe for more deep dive crypto analysis. Hit the notification bell so you don't miss our next breakdown, because in crypto, timing is everything. And remember, always do your own research, never invest more than you can afford to lose, and stay disciplined with your risk management. Important disclaimer: this content is for educational and informational purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and speculative. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial advisors before making investment decisions. The creator of this content may hold positions in the cryptocurrencies discussed. Never invest more than you can afford to lose, and be aware that you could lose your entire investment.